They are in deep trouble. Deep trouble. Do I think they're in deep trouble? No. But there's people out there saying that they are in deep trouble. We're going to talk about what that means. Hey, everybody, it's Thursday, January 20th, 2022. Thank you for being here. Let's go right to this article. Per Dick Bove, the money creators are in deep trouble over disaster balance sheet. This was a recent interview. He is the chief financial strategist for Odeon Financial. Now, let's clear this up. Anyone that tells you that the Fed, that the money creators are in deep trouble is sadly mistaken. Either that or they're just lying to you. And let me put it this way. If you had the ability to click a mouse and create trillions of dollars digitally, would you ever be in trouble if you had those capabilities? Of course not. None of us would. So no, the Fed's not in trouble. Who is in trouble is the working class. Probably a lot of you watching this video, probably even myself. We're in big trouble because we're going to see prices continue to skyrocket. These little rate hikes that they're talking about, they're not going to make a dent in the inflation. They're likely not even going to be enough to bring the cost of living down in many different areas. When you look at the other problems that we have bigger problems than just interest rates being too low. We have a manufacturing problem here. We have a spending problem. We have a monetary system problem. We have a labor force problem. We have a lot of problems here, not just interest rates. So yes, they may raise interest rates by a fraction of a percent. They may do it 3 or 4 times. I doubt that's even going to happen. But is it going to make a big difference? Well, not really, because with the type of inflation that we're seeing, technically we would need 6, 7, 8, 9% interest rates to really make a noticeable difference in this runaway cost of living, rising price environment. Let's go to a longer term chart here on interest rates. And let's go back to the 80s. This was under Alan Greenspan. And take a look back here, and you can see the Fed funds rate spiked up to almost 20% at one point. Does anyone think that at today's debt levels, we can come anywhere close to what we did back in the 80s? So to fight inflation back then, when debt was a fraction of what it is now, they raised interest rates to nearly 20%. And prices now, the cost of living now, exponentially higher in the stratosphere, higher than it was compared to the 80s. So no, we cannot raise interest rates even close to that. The fact that we're talking about fractions of increases to the interest rate, 0.25% each rate hike, and just 2 or 3 rate hikes is what they're talking about. The fact that we're talking about such small rate hikes should let everyone know the real situation. The real situation is we have unsustainable debt, and they're terrified, they're afraid of raising the rates even a fraction of a percent. So they're between a rock and a hard place. But again, they're making millions of dollars. It's going to be the American people that really feel the pain, or the American people are the ones that are in deep trouble. Unless you know how to profit from this environment. And that's one of the things we try to do here. And it seems like the markets are pretty scared. Let's talk about what happened in the markets today. And it was a pretty wild day. We saw about a 800-point swing in the Dow Jones. Today, the high was at 35,490. We ended the day at about 34,715. We saw a low of 34,670. So an 800-point swing is a very volatile day, even in the current environment. So what kind of people are buying heavy at the beginning of the day, midday, and then selling off at the end of the day? Is it the average investor, people like you and me, the retail investor? No, this is big money, institutional money, and wouldn't surprise me if the plunge protection team was in there. And who knows what would have happened if it wasn't for the plunge protection team. It could have been a bigger disaster than it already was. But all major indexes today in the red and negative. All right, so think about this. If we're seeing this type of volatility and this type of sell-off, even with the discussion of tiny fractions of rate hikes, what's going to happen if and when they actually do rate hikes? Is it going to be 10 times worse than what we saw today? Well, we'll have to see. But I would be very cautious right now. Now, here's something even crazier. JP Morgan, Jamie Dimon, CEO, is out there saying 6 or 7 rate hikes are possible in 2022. Either he is just saying it to try to get a bigger reaction out of the markets, to get a bigger sell-off. Maybe he's trading on the fear that he's put into the markets. I don't know what his motive is. But to think that we're going to raise rates 6 or 7 times is nonsense. And of course, we're going to watch it and we're going to go back to this and see if he's right or wrong. But I highly doubt we're going to see 6 or 7. I'll be surprised if we see the 2 or 3 that the Fed said is possible. All right, so again, let's step back here and let's put this into perspective. The Fed, they're not in big trouble. They cannot get in big trouble. At the end of the day, they're going to be off on their private jets, millions of dollars. They're making millions in trades, trading off of information that they know because they are connected to Wall Street. In fact, many would argue they are Wall Street. They are the biggest buyers. They are the buyers with endless pockets. They are the ultimate buyer and they are the ultimate seller. They can move markets, again, at the click of a mouse. So what can we expect here? We can expect prices to continue to rise, the cost of living continuing to rise. There may be some people here buying the dip in these markets. Please let me know what you're doing down in comments. I continue to accumulate anti-debt instruments, including silver, and I hope it pulls back even more. If that's the case, I will buy even more. I think it's the number one undervalued asset at this point. I'm being a little bit careful in the cash position right now, trying to keep the money out of banks. I think there's a lot of things happening behind the scenes that we need to be very, very careful about. When they're preparing for a financial system blackout, they're saying it's a drill. I would be very, very careful. I would think twice about how much money you're keeping in the bank at this point, put it that way. But most people have all of their net worth tied up on some sort of a digital platform on their phones online. And if there was a freeze up in the credit system, the financial system, or even some sort of a outage or blackout, most people would be scrounging for food. In just a matter of 24 to 48 hours, you would see disaster unfold. I hope that never happens, and it's possible that it will never happen. But if it does, look out, because if anything like that even happens for a few days, it's going to get very, very dangerous. So tread carefully, folks. Thanks for being here. Appreciate you watching this report. Please comment down below. We'll talk to you very soon. Stay well, stay safe, keep stacking. Bye for now. Peace.